Welcome to the Washington Valuation Group. The importance of business valuation. Introduction. A. Definition of business valuation. Business valuation is the process of determining the economic value of a business or asset. It measures what the company is worth in terms of the present value of its expected future cash flows. Business valuation involves analyzing financial statements, assessing the value of assets and liabilities, and considering a range of other factors such as industry trends, the competitive environment, and economic conditions. It is a necessary step in mergers and acquisitions and is used for tax, legal, and financial reporting purposes. B. Overview of the importance of business valuation. Business valuation is an important tool used to determine the economic value of a business. It is used by investors, lenders, and owners to help make informed decisions about the business. It is also important for tax purposes, as it helps determine the fair market value of the business for tax purposes. Business valuation can also be used to assess the potential sale value of the business. Finally, it can be used to help determine the best pricing strategy for the business. 2. Reasons for business valuation. A. To determine the value of a business. B. To assess the financial health of a business. C. To determine the fair market value of a business. D. To assess the potential of a business. 3. Types of business valuation. A. Asset-based valuation. The asset-based valuation approach is a method of valuation that considers the value of a company based on the value of its assets. This approach is commonly used to value companies whose assets are tangible, such as real estate, manufacturing plants, or equipment. This approach looks at the physical assets of a company and values them based on their fair market value. The asset-based valuation approach can provide a useful measure of a company's worth, but it may not always be the most accurate method of valuation. It is important to consider other factors, such as a company's earnings and potential for growth, when determining value. B. Market-based valuation. The market-based valuation approach is based on the principle that the value of a business is equal to the sum of the values of its individual assets. This method looks at how much the company is worth by comparing it to similar companies on the market and taking into account both its tangible and intangible assets. This approach may also include an analysis of the company's financial performance, its competitive advantages, and its overall position in the market. This approach is generally used when a company is looking to sell or purchase another business. C. Income-based valuation. Income-based valuation is a method of valuing a business or asset based on its income. It is based on the theory that the value of an asset is equal to the present value of its future cash flows. This type of valuation is commonly used for stocks, bonds, real estate, and businesses. It is an important tool for investors, as it can help them determine the potential return on their investment. In addition, income-based valuations can also be used to compare different investments and assess their relative value. IV. Benefits of business valuation. A. Helps in making informed decisions. B. Helps in setting realistic goals. C. Helps in determining the right price for a business. Versus conclusion. A. Summary of the importance of business valuation. Business valuation is important for a variety of reasons. It can help a business owner determine the fair market value of the business and provide information that can be used to make more informed decisions. It can also provide insight into potential investments, mergers and acquisitions, and other strategic decisions. Valuations can also be used to help resolve disputes or in the event of bankruptcy or dissolution. Finally, they can provide evidence of the value of an owner's equity in the business. B. Final thoughts on the importance of business valuation. For business owners, potential buyers, lenders, and investors to determine the worth of a company or its assets, business valuation is a crucial tool. It assists in guiding choices regarding whether to seize a business opportunity, make an investment in a business, or buy an already existing company. A valuation can also serve as a foundation for other decisions, such as determining the loan's value or estimating a company's value for tax purposes. Decision-makers can greatly benefit from the use of business valuation as a tool to better understand the value of a company and make wise choices. Thanks for watching.